So the RBI has cut rates by 25 basis points. Is the first monetary policy unveiled by Dr. Urjit Patel and the newly constituted Monetary Policy Committee. Let's discuss that more with the Economic Affairs Secretary, Mr. Shaktikantha Das. We're joining you live from Toronto. Thank you, Mr. Das, for joining us here on ET Now. I want to get your initial reaction. We've seen an interest rate cut of 25 basis points. Do you think, first of all, this is going to be transmitted and passed on by the banks?
You see, first of all, I would like to welcome the rate cut by the RBI by 25 basis points. So it's highly welcome. And now it's for the banks to do the effective transmission of rates. And I would expect the banks to transmit the rates because recently also we have reduced the small savings rates by 10 basis points. Before that, we had reduced about 6 months ago, we had reduced the small savings rates also by 50 to 60 basis points. And this is the second reduction done by the RBI in the current year. So I would expect, and in fact, there is a reasonable amount of expectation that the banks would transmit these rates because that is something which will, I think, spur growth, and that is something which will also help the banks to restart the process of lending to various sectors which are perhaps today a little choked of lending facilities, and particularly to SME and other sectors. I would expect the rate reduction to be done by banks and to be beneficial to the borrowers.
So the reason I was asking about the transmission was because we already have a lag in the system, and we've seen provisioning come down, NPAs come down, but the balance sheet maybe not as healthy as the banks want. That's why I was asking you, could any directive perhaps be given to the PSBs?
No, we cannot give a directive because the PSBs, they are autonomous and they have to decide. These are commercial decisions which the public sector banks and all banks will have to take. You cannot differentiate between a private sector bank and tie up the hands of public sector banks. But yes, you are right. I mean, the transmission, but we have to remember that the transmission of rates cannot be one-to-one. If RBI cuts by X basis points, obviously we cannot expect banks to transmit by exactly the X basis points. But having said that, the rate transmission has to be effective. And you are also right that so far, out of about 150 basis points or so rate cut, which RBI has undertaken from January 2015, the banks have transmitted about 70 to 80 basis points. So now, therefore, I think there is sufficient ground for the banks to transmit a good part of the rate cut which RBI has effected.
What about the timing of it? Are you going to read it as a pre-Diwali cheer? Could we see a spur in consumption if the banks were to pass it on?
Certainly. I mean, particularly, the various consumption loans, but, for purchasing vehicles or two-wheelers or other household equipments, whatever loans the banks give. And particularly, one would expect this should have if the banks transmit the rates, this should have a good impact on the housing sector also, because that is one sector which is immediately impacted by the rate reduction. So let us wait and see. I think it is now for the banks. It's for the banks now to take a decision.
Because another important statement that's come out from the RBI is that it's going to unveil some new norms as far as stressed assets go by the end of this month. Can we get any idea of what that could be or how significant?
You see, the RBI has already issued certain guidelines for treatment of stressed assets, and now the RBI, is considering. I will not be able to sort of spell out the details. In any case, the details are being worked out, and it has not yet been finalized, because if it was final, they would have already announced it. So the details are being worked out, and we'll have to wait till the end of October. Now, let me also take this opportunity to mention what is important in this measure, which the RBI has taken, is that I think it is a movement towards having India as a low-cost economy. The inflation rates are low today. RBI estimates the inflation to be 5.3% during the current year. One would expect interest rates to be also around 5% or so. Now, the interest rates also, should go down. And the cost of logistics also, with GST coming in, the cost of logistics should go down. The tax rates, I would expect in the medium term, the tax rates also to moderate because of the impact of the GST. So basically, our effort is to move towards a low-cost economy. Low cost not in terms of wages or salaries, because there the employees and the workers will have to
More
get a
affordable consumption.
they'll have to sort of get a reasonable amount of wages and salaries. But having low interest rates, having the cost of doing business in the economy should go down. And this policy direction which the RBI has given today, I think it augurs well for a movement towards having India as a low cost economy.
While you're talking about low cost, the governor fears that we might see a spike in the CPI inflation, especially due to the seventh pay commission payout. Do you agree with that view?
You see, I have not seen the full text, but when the seventh payout has been, it was announced, and the arrears and the salaries have been, getting disbursed from end August onwards, it contributes to growth. So therefore, it is positive for the GDP. The point from where the concern is coming is perhaps with regard to the house rent allowances as and when they are revised, because house rent allowances form an important component of the way inflation, CPI inflation is calculated. Probably the statement of RBI that it could contribute to inflation comes from that point, that as and when the house rent allowances are revised, it may contribute to inflation. As you know, government has constituted a committee to look at the various allowances which the seventh pay commission has recommended. The committee is deliberating on these issues. So when the decision is announced, I think we will know exactly how it pans out. But I don't expect this to have a significant impact on inflation, because there are other factors which affect inflation. There are positive.
Because the other way to look at it is it could have a very good, it could be very good news for the GDP. Consumption goes up, maybe manufacturing will go up.
That's right. I mean, the seventh pay commission is net positive. It's net positive for GDP and net positive for the economy. And so far as the fiscal is concerned, it's already factored into our budget numbers. So I would expect broadly the seventh CPC to be net positive for the economy.
So I just wanted to get your views on the spectrum auction, because it's the last day in India. It does look perhaps the government may not be able to meet its budgeted target of 5 lakh crore rupees. Does that put any threat on the fiscal deficit?
Let's wait for the auctions to be over. I mean, only when the auctions are over, I think it's better to recalculate the numbers if we need to recalculate. But I think at this point of time, let me say that we are, at this point of time, I can say that we will achieve the fiscal deficits.
And you've anyway got a bonus now from the tax on black money. That's a 15,000 crore rupee bonus suddenly.
Yeah, I mean, it adds to our tax revenues, and now the amounts will start coming in. And this year, the agriculture sector has done reasonably well, and it will impact in two ways. One is, of course, it enhances the rural consumption power in the rural sector. So therefore, that will be good for GDP. That will be good for the demand creation, and that will be good for GDP. At the same time, when there is more buying and selling, it also contributes to the indirect taxes, and that's a huge positive development. And with more food, as and when the impact of the good monsoon is seen in the rural markets, I think it will be good for inflation also, particularly because food prices are expected to moderate in the coming months. So therefore, there are many positives with regard to inflation. One factor, because of house rent allowance as and when it is revised, I don't think that will make a significant impact on the inflation figures.
So people that watch the inflation figures, fiscal deficit, etc., very closely are, of course, the rating agencies. And you've had a very stern message sent out to Moody's. Have you heard back from Moody's? Are they going to change the process of maybe meeting the government before coming out with all these reports?
No, we haven't heard back from them. In any case, it's for them. I mean, they have their own autonomy to, it's their decision to do a rating. We don't want to interfere in their process. We cannot interfere in their, conclusions. But our concern was mainly about the process of having reached a conclusion before even talking to us. And also, we were quite concerned at the fact that I think India being the fastest growing major economy, the IMF calls India as a bright spot. The number of reform measures which the government has taken over the last 1 year, it's unparalleled among any other country in the world community. Today, we are doing the maximum amount of reforms. So when you do so much and don't get any weightage, well, that is something which we felt was rather disappointing and perhaps unacceptable.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at ET NOW Live. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ET Now.